If you are watching this video right now, you are very lucky. Because I never planned to drop this strategy on YouTube. But for your sake, my tribe soldiers, today in this video, for the love that I have for you guys, I will be dropping a very strategic strategy that can make any trader a millionaire in trading this year, next year, and many years to come. This strategy is evergreen, and it will keep working till eternity, as long as humans are on the face of this planet. This strategy can be used in Forex trading, stocks trading, crypto trading, and other financial markets. You can't find this strategy anywhere. Now, my tribe soldiers, let's get down into business. There are two problems that have not yet been fully solved in the market. And I have seen a lot of traders facing this every day. Everyone thinks it's simple, but we are actually struggling with it every day. We use a lot of tools to decipher them, but yet they are so hard to compromise. It does not even matter if you have 30 years of trading experience. This is the reason why a trader will make $50,000 today and lose $35,000 the next day. These two problems are called the trend and the entry point. Now take your time to think about it as you listen. The reason why the trend is hard to decipher is the major reason why Forex trading, crypto trading, or stock trading is hard. And it is the major reason why you are listening to me right now. You want to learn a better way to harness the trend and make a lot of profits for yourself. You want to be rich and prosperous in your trading journey. And you are doing the right thing. In fact, you are watching the right video that will put you on that path. Alright, by now everyone knows that the trend moves in two ways. It moves in an uptrend and in a downtrend. That's so simple, by the way, but this is the greatest puzzle every trader will have to solve every day to unlock their profits from the market. Pay close attention to this. Some traders go far to analyze 3 to 4 timeframes in order to understand where exactly the market is actually heading to. But how do you even know the wave of a trend from looking at way to many timeframes? Many times you can see the candles moving in red candles on the higher time frame. Then you assume that you are in a downtrend. And by the time you enter the market on another time frame, you will be shocked to your bones to see those candlesticks you predicted beginning to move in green candles. The market has deceived you again. Other times you can also predict a trend reversal on the higher time frame using all the tools and strategies you know. And by the time you take the trade on a smaller time frame, it turns out that the market was actually breaking through, even more than you expected. This is the point where some traders begin to ask themselves if they are overwhelmed with bad luck, or the brokers are doing some other business with their accounts. If I sell, the market will buy, and if I buy, the market will sell. What should I do? I will tell you exactly what you should do after I uncover the second problem, which is the entry point. The entry point is the final battle of a trader. Let's imagine that you are able to successfully decipher the real direction of the trend. You are still going to face the battle of the entry point. The entry point is not as strong as the problem of identifying the right trend. The major impact it has on a trader depends on the account size of which the trader is trading with. Many times you have encountered this problem of which you take a trade and then it turns out to become a loss. But as time reveals the chart, you begin to find out that you did not actually lose the trade. You were only taken out by the market because of your stop loss, or because your account was no longer able to hold the loss due to a small account size or over leveraging. And when you are already out of the trade, you see the market gloriously moving in the direction of which you predicted earlier. Then you regret entering the trade too early or taken out of your position too fast. But hey, let's begin to solve this problem one after the other. And I will be starting with the trend identification. How we can clearly identify the trend, which will then lead us into the strategy. There are many tools we use to identify the trend, but none of them is as good as the trend line. The trend line got its name from the trend because it identifies the patterns of which the traders are actually moving with. There are many secrets I will be revealing now about the trend line. Placing your full focus to it. You may have to rewatch this video multiple times to get it, but follow me carefully as I drop them. The first way is to correctly draw the trend lines. Once you have identified the trend, using the 3-step trend formation setup, you draw your trend line correctly. The best way to draw your trend line is at the tip of the lows if you are targeting an uptrend, or at the tip of the highs if you are targeting a downtrend. So you take your trend line and you draw it at these 2 tips. When you draw a trend line at the tip of the lows or highs, you get a new level of confidence when the price returns to it. At that point, you now know that when the market touches it, it will no longer be a coincidence. You are now trading at a strong level in the market. Another secret lies on the size of the trend movement, of which you are drawing your trend line on. The size of the market movement will give you hints of what will happen in the market, and it will tell you to either expect a big movement or a small movement. Take a look at this. If the trend is moving very strong and large, and we draw our trend line, we expect the market to land big and come with much force when it pulls back to touch the trend line. And if the market is moving in a small trend and we draw our trend line on it, we do not expect it to come back with much force, like the bigger markets. This is the most important part of a trend line. The trend line can actually be drawn at any point in the market, as long as you identify the 2 lows or highs formation, and it had a good valley like in the pullback. My tribe soldiers, follow me carefully. What really matters is the price reaction when the market returns to the trend line, and that is the point where we will be needing a great entry point. Now, there is a thing in trading called catching a falling knife. This is when the market is coming with so much force to a certain level in the market, but the trader still goes ahead to take a position, and before you know it, the market wipes him out of the position and settles properly, before moving in the real target direction again. When the market is coming down, we want to see it lose momentum from its former movement gradually, as it gets ready to build up and start another rally. And this is why we are going to employ one of the strongest chart pattern in trading, called the double top and the double bottom. The double top and the double bottom helps to weaken the movement of the market. We want to see them forming after the market has touched the trend line. And to get this perfectly, we need to watch out for a different size of the double top and bottom pattern according to the size of the market. When the market is moving in a large trending market, we want to see a larger double top and bottom when the price returns to the trend line. And when the market is moving in a smaller trend, we want to see a smaller double top or bottom when the price returns to the trend line. When the market pulls back to touch a trend line in a large trending market, and you start seeing a small double top formation, it signals that the market will actually break through again and move beyond that position. And when you start seeing a large double top or bottom pattern forming on the trend line in a small trending market, it mostly signals that the market is ready to reverse the overall trend direction and move into a new trend. Now let's look at an example of this. Here we have a large uptrending market, and we draw our lines at the tip of the lows, then wait for the market to return to the trend line, and when it does, we also wait to see a double bottom formation, which will then determine our next line of action. If it gives us a small double bottom, we ignore it and wait. But when it does give us a larger double bottom, it will now become a point of interest, and we will be looking on taking our trade from there. Now, on this other example, we have a small trending market. And when the market retraces back to the trend line, we will be expecting the market to form a small double top, and when it does, that we will now start aiming to enter a trade. But hey, before I continue, I will tell you that the market will not give you this opportunity all the time. The price can just touch the trend line and start reversing, but that will also bring a lot of losses. But if you are patient enough to wait for this step-by-step processes, you will highly increase your chances of winning in your trades. The next step in this strategy is the point where we enter the trade after the double top or bottom formation. We want the final whistle to take off, something that really shows us that the buyers or sellers have gained full control of the market again and are ready to reverse the market. And for this, we are going to be using an entry candlestick called the momentum candlestick pattern. If you have been following me up for long now, you will notice how I love this candlestick, because it's not only a candlestick entry, but it gives us additional information. It signals to us that the buyers or the sellers have gained full control of the market and are ready to push the market further. And many times, after this momentum candlestick, you will not see the market return back again. Instead, it will reverse and continue making more impact on the market. Let's do a quick recap before I show you some more live examples. So first of all, we identify the trend type, if it's large or small, if it's an uptrend or a downtrend, and then we draw our trend line on the tips, on the lows or the highs. And after that, we wait for the market to return to the trend line and give us a good double top. And then we look out for a great entry candlestick, which is our momentum candlestick. Now let's see some examples. So on this chart right now, you can see that the market is moving in a downtrend. So we draw our trend line on the highs and we wait for the market to return to it. When the market finally returns and touches the trend line, we wait to see a double top happening on the trend line. This double top is great for the trend line due to the market size, but if it was something like this, we would have ignored it. So after the double top formed, we then wait for our momentum candlestick, and here we have a bearish momentum candlestick appearing after the double top formation. This will now give us a go ahead to enter the market, and then we place our stop loss a few pips above the momentum candle and our take profit level at the next low, giving us a great profit margin. If the market hits our stop loss after all this process, then that loss was meant to be, and we will take it honorably. Though based on my backtest results on this strategy, 75% of the time, the take profit target got hitted successfully. And here, we have our take profit target hit successfully. Now, let's take a look at another example. So here we can identify an uptrend as the market is making higher highs and higher lows. So we draw a trend line at the higher lows, and after that, we wait for the market to return to the trend line. And when the market returns to the trend line, we wait for a double bottom pattern to form. Now, here we have a double bottom pattern formation, which also formed according to the size of the market trend. So we wait for our final entry signal, which should be a bullish momentum candlestick. Remember, if you don't see a bullish momentum candlestick, you should ignore the whole setup completely. This strategy will not only teach you to make profits from the market, but also helps to maintain and keep your discipline. Now, here we have a bullish momentum candlestick forming after our double bottom pattern, giving us the final signal to enter the trade. And after that, we place our stop loss a few pips below the momentum candlestick and our take profit target at the next high of the market trend. See how our take profit target got hit successfully. This trendline strategy will give you a lot of profits in the market and make everyone profitable. All you need to do is follow the trend, identify a good double top or double bottom pattern and a momentum candlestick for your entry. This should not be hard, but if it looks a bit hard for you, rewatch the video again and again till it starts sinking deep into your memory. But don't say it's too simple, and then go ahead to start trading it right away on your real account. You will still have to backtest it several times on your demo account in order to gain full mastery before trading your money with it. And if you want a more personal trading mentorship with me, so I can teach you one-on-one and impact more experiential knowledge into your life, you can contact me using the link in the description box below. Now, in this strategy, I taught you all on how to trade along with the trend, but in this video you will learn how to trade trend breakouts. You will know the exact 3 things that happens immediately after each trend breakout, and how to take advantage of each of them, so you never miss out on the beginning of any trend. We are the Trading Tribe, and it's a wrap for this video. See you in the next one.